All right, so here's how the stock index portfolio ended up today. Adaptive moving average took several trades. It was short and then flipped to long. Looked like the market would just slow grind to new highs on a Friday close. Then some tariff news came out and it got slammed. Adaptive moving average reversed and it's up 1337.50 on the day. So adaptive moving average is plus 1337.50 on the day. Let's take a look at the other strategies in the portfolio. Night trader. It was stopped out yesterday, but it was up today. Hit its profit target. Plus 700. ES night. Plus $700 on the day. We had 60-minute breakout. This was fast and efficient. I like fast and efficient trades. You can't always get those unless the market gives them to you, though. So you just have this grind, pop, reverse, pause, and so we'll see what happens from here. If they try to mean revert it, or if this trend continues. We're below yesterday's lows on the FOMC, so that's just a side note. Plus 1,000 on 60-minute breakout. So here we go, 60. Stop this in 60-minute breakout. Plus 1,000. And you can divide these numbers by 10 if you're on the micros. And I don't think these are some of these are not counting slippage and commission. Some of them are. Let's see here. We'll keep track of the total trade. So 5, and then there's 2 losses on the day. Let's see. I see 2 more trades. They're red. And so we have a loss here, a tick pulse. I always hate it when you get stopped out right there at that high. It sold off, and then from 4 o'clock on, it's kind of choppy. There tends to be this hold up going on here, where historically the market would sell off into the close more, but now there's just kind of a propping mechanism to the market. So if it sells off pretty hard at 2 o'clock, oftentimes you won't see much more selling, but part of this bounce right here was bounce back just enough to stop us out, 12 points, and then it made new lows and then went sideways. So I always hate to see that. A 13-point stop loss would have worked, but a 12-point didn't. So tick pulse was minus 600. So let's go back and look at gap continuation. This is a tight stop. It was on its way to a nice trade, but minus 300. Pretty easy to take a trade when the stop loss is only $300 stop loss, so only $30 on the micros. But the upside is not as much either. So besides 2019 gap continue, you can also find that in our 7 trading systems for the S&P futures membership site. Plus or minus 300, and so that was 1, 2, 3, 4, 5 strategies, and one of them took 3 trades, the other took just 1 each, so 7 trades total. And let's take a look here at the total. 2,000, 3,000, minus 900 roughly, so plus about 2,100. If you take out slippage and commission on that, if you take out another $200 roughly, you're at plus 1,900 on the E-minis. If you're on the micros, you're at plus 190. So these are the trades today on the stock index futures, the portfolio that we have, and plus 1,900 on the E-minis, plus 190 roughly on the micros.